In this video, we are going to be analyzing Delta, ticker DAL. So we are up at $48.75 as we're recording this video. Now this is key because what we are coming into are relatively high probability reversal levels. So $49, so about 25 cents from where we are now. This is our third deviation on what? The 6 month. So again, just so you know, when you're watching this channel, the dashed lines are 6 month charts and the solid lines are 1 year. So again, this green one is also a third deviation, but from the 1 year. So what we see when we see stocks is very rare that stocks can hold or break and hold above this level. So what I'm really looking at on Delta, again, this could be from either a day trading or swing trading perspective. I think on these larger caps, though, the home run trades really do come from the swing trades. But as we start to break into the $49 to $50 range, really looking at it short bias, and we look to trade down to our lower deviations. So if we do break this, again, I'll be looking to trade it through risk-defined strategy. So if it did squeeze for any reason, we would be protected. We wouldn't have to kind of jump out the trade to kind of follow a stop loss, because again, our loss is defined going into the trade, so we don't need to jump out. We just wait for the options to expire, and that will take us out the trade when they expire. So that is how long our trade would last. That would be the key range. But what I would then be paying attention to is what are our targets. If it goes against us, we've covered that. Again, we'll play it risk defined. So that can mean short the shares, buy the calls, it can mean vertical spreads, it can mean buy outright puts. Those are the three ways I usually look to trade stocks. Again, this is easy to borrow. We can trade any way, any three of those ways that we want, because it is easy to borrow, does have options. So any three of those ways are possible. So what are those downside targets then? So what I'd really be looking for is shorting 59 if it did break higher than $50 to get some more size in, and looking to trade to targets of 46 and 45.50. So again, these would basically just be our first profit target. This is how I'd be looking to trade it. Depending on how long you want to be holding it, we could look to get completely out here, but this is usually what I'd be looking at. If we can do this relatively quickly, meaning within a week, maybe two, this is where I'll be looking to get out the bulk of the position. As well, once we get here, anything on the remainder of the size will probably have a break-even stop. Now, if we break lower and we go through our first take profit and we want to hold through here, then we can trade all the way down to 42.75 to 42.25, because this would be our first deviation between the 6 month and the 1 year. So again, a really high probability area that we start to hold, and doesn't even mean that we'll continue up from here, but there's a lot less chance that we do continue down from this level. And that's why if we short these highs, we come into the highest probability level that we move to, and then we may get a potential bounce. That's why we lock in profits. But if we can continue down, good chance we make it all the way down to $43 coming into those deviations. And I like to jump out completely here, because then there is a good chance we could continue this upward momentum if the stock is overall strong. So again, we talked about how we're going to define the risk on this trade. We talked about our supports on the way down. That's how I'm looking to trade it. But again, remember, this isn't financial advice. So maybe you want to pay attention to the levels, but not trade it the same or whatever. But again, this is just what I'm looking to trade. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.